Analysis: as Ukraine battle drags on, Europe's economy succumbs to crisis. Frankfurt: it become meant to be Europe's stellar year. A post-pandemic spending euphoria, supported by way of copious authorities' spending, became set to force the economic system and help fatigued families regain a feel of normality after dreadful years. But all that modified on February 24 with Russia's invasion of Ukraine. Normality is gone and crisis has grown to be permanent. A recession is now nearly positive, inflation is nearing double digits, and a wintry weather with looming electricity shortages is speedy approaching. Though bleak, this outlook remains in all likelihood to worsen before any widespread improvement well into 2023. Crisis is the new regular, says the Alexander Bompard, the chief executive of store Carrefour EPA, CAR. What we have been used to in the ultimate decades low inflation, international alternate, it's over, he informed traders. The trade is dramatic. 12 months in the past, maximum forecasters predicted 2022 monetary increase close to 5%. Now a wintry weather recession is becoming the base case. Graphic: Euro region inflation surges 20% 201,661,170,928,942. PNG households and businesses are each suffering because the fallout of the battle. Excessive meals and strength expenses is now exacerbated through a devastating drought and occasional river tears that constrain shipping. At 9%, inflation within the euro area is at tiers now not seen in a half a century, and it is sapping shopping energy with spare cash used up on petrol, natural gas and staple meals. Retail income are already plunging, months earlier than the heating season begins, and consumers are scaling down their buys. In June, retail income volumes had been down almost 4% from a 12 months in advance, led with the aid of a 9% drop recorded in Germany. Consumers flip to cut price chains and give up excessive stock merchandise, switching to discount brands. They have additionally began to bypass sure purchases. Life is becoming extra steeply priced and customers are reluctant to eat, Robert Gentz, the co-CEO of German store Zalando, informed reporters. Businesses have so far coped well thanks to super pricing power because of continual supply constraints. But energy-in-depth sectors are already suffering. Close to half of Europe's aluminium and zinc smelting capacity is already offline, whilst a great deal of fertilizer production, which relies on natural gas, has been shut. Tourism has been the uncommon bright spot, with people looking to spend some of accumulated financial savings and experience their first carefree summer when you consider that 2019. But even the tour sector is hamstrung by means of capability and labor shortages, as people laid off at some stage in the pandemic have been reluctant to go back. Key airports, such as Frankfurt and London Heathrow, had been forced to cap flights sincerely due to the fact they lacked the group of workers to method passengers. At Amsterdam's Schiphol, waiting times may want to stretch to 4 or 5 hours this summer season. Airlines also could not cope. Germany's Lufthansa needed to submit an apology to clients for the chaos, admitting that it became not going to ease each time quickly. Recession looms. That ache is probable to heighten, specifically if Russia cuts fuel exports. In addition, the fuel shock today is much extra. It's far almost double the shock that we had again in the 70s with oil, Caroline Bain at Capital Economics mentioned. We've seen a 10 to 11-fold boom in the spot price of herbal gasoline in Europe during the last years. While the EU has unveiled plans to boost up its transition to renewable power and wean the bloc off Russian gasoline by using 2027, making it more resilient ultimately, supply shortages are forcing it or seeking a 15% reduce in gas intake this year. But power independence comes at a price. For normal people, it's going to imply colder homes and workplaces inside the short run. Germany, for instance, desires public areas heated solely to 19 degrees Celsius this winter, as compared with around 22 tiers formerly. Further out, it'll mean higher electricity fees and as a consequence inflation because the bloc ought to give up its biggest and cheapest energy resources. Graphic. Economy underperforming 20 image percent 201,660,122,174.png for corporations. It will suggest decreased production, which eats further into boom, especially in enterprise. Wholesale fuel prices in Germany, the bloc's biggest economy, are up fivefold in a 12 months. However, clients are blanketed with the aid of long-term contracts, so the impact to this point has been a ways smaller. Still, they may ought to pay a central authority-mandated levy, and once contracts roll over, fees will soar, suggesting the effect will simply include a delay, setting persistent upward stress on inflation. That is why many, if no longer maximum economists, see Germany and Italy, Europe's number one and no.